Welcome back. And before you scroll, before you doubt this, before you complain about today's red candles, you need to hear this properly, because what just happened with Ripple is not normal crypto news. This isn't another partnership tweet. This isn't another maybe someday rumor. Ripple just received conditional approval to become a federally regulated national trust bank. And if that sentence doesn't immediately make you stop caring about a short-term XRP pullback, then you're focusing on the wrong game entirely. Let's address the elephant in the room right out of the gate, because I know exactly what you're thinking. If this news is so big, why is XRP down today? That question alone tells me how conditioned most people have become to trade headlines instead of understanding structure. Markets don't move on significance. They move on timing, liquidity, and positioning. And historically, the most important developments in finance rarely come with instant price gratification. They come quietly, they come during boredom, and they come when most people are distracted by noise. What Ripple just received from the Office of the Comptroller of the Currency is conditional approval to operate as a national trust bank in the United States. That immediately places Ripple in a category that most crypto companies will never touch. We're talking about direct federal oversight, regulated custody, stablecoin issuance, and institutional-grade settlement infrastructure. This is the kind of approval traditional banks spend decades building toward. Ripple didn't stumble into this. They've been engineering it for years. And here's why this matters more than price today. Becoming a national trust bank means Ripple is positioning itself inside the financial system, not adjacent to it. This isn't rebellion finance. This is integration finance. It means Ripple can operate across state lines without needing individual licenses. It means they can custody assets, issue stablecoins, and settle value at a national and global scale under a federal framework. That is the opposite of speculative crypto behavior. That's institutional inevitability. Now zoom out for a second. XRP has spent years being labeled everything from dead to centralized to irrelevant. Meanwhile, Ripple has been quietly building regulatory credibility while most projects were chasing hype cycles. And today, while price action is boring or even slightly painful, Ripple is laying the foundation for something that simply didn't exist in crypto 5 years ago, a regulated digital asset bank with global settlement reach. This is also why short-term price weakness doesn't scare experienced capital. Big money doesn't chase green candles. It accumulates when news is complex, misunderstood, or boring. And let's be honest, most people don't even know what a national trust bank is, let alone why it matters. That's usually the signal that something important is happening underneath the surface. If you're here for a quick flip, this probably feels frustrating. But if you're here because you understand that real value is built where regulation, infrastructure, and liquidity intersect, then this is one of those moments you'll look back on and realize the market gave you time. Time to learn, time to position, time to decide whether you're investing based on conviction or emotion. Because once this conditional approval turns into full operational authority, and we'll get into what that actually requires, the conversation around Ripple and XRP changes permanently. Not overnight, not on one candle, but structurally. And that's exactly where the real money is made. All right, so now that you understand why this matters at a high level, let's slow this down and actually unpack what Ripple was approved for, because this is where most people get it wrong, oversimplify it, or completely miss the real implications. The OCC didn't just approve Ripple. What they granted was conditional approval for Ripple to establish and operate a national trust bank, officially called Ripple National Trust Bank. And no, this is not the same thing as your local bank where you deposit a paycheck and apply for a car loan. A national trust bank is designed specifically for custody, settlement, fiduciary services, and asset management, which just so happens to be exactly what digital assets, stablecoins, and institutional crypto demand. This is the critical distinction most people gloss over. Ripple isn't trying to compete with Chase on checking accounts. Ripple is positioning itself as infrastructure, the plumbing behind how money actually moves, settles, and gets custodied at scale. And once you see it that way, the entire strategy snaps into focus. With this charter, Ripple will be able to issue and manage RLUSD, their dollar-backed stablecoin, under direct federal supervision. That means reserves, audits, compliance, and transparency at a level institutions require before they touch size. This alone elevates RLUSD into a completely different league than most stablecoins people trade casually on exchanges. It's no longer just a stablecoin. It becomes a regulated settlement instrument, And here's the part that really matters. This approval allows Ripple to do this nationally without needing to navigate 50 different state regulatory frameworks. That's a massive advantage. It removes friction, accelerates onboarding, and makes enterprise adoption realistic instead of theoretical. Banks, funds, and payment providers don't want regulatory puzzles. They want clean rails. This gives them that. Now, to be very clear, this is not a final green light yet. Ripple still has to complete specific requirements: capital adequacy, risk management frameworks, AML controls, final audits, and system integrations. But let's be honest here, Ripple didn't stumble into this stage by accident. You don't get conditional approval from the OCC unless you've already cleared most of the hardest hurdles. This is the final stretch, not the starting line. And what's even more telling is Ripple isn't alone here. BitGo, Fidelity Digital Assets, Paxos, these are serious players receiving similar treatment. That tells you something bigger is happening. This isn't about one company. This is about the U.S. financial system formally onboarding digital asset infrastructure, and Ripple is at the center of that transition. This is why I keep saying price today is irrelevant. Markets are obsessed with immediate reactions, but institutions care about legal certainty and operational clarity. And that's exactly what this provides. When you connect the dots, regulated stablecoins, national settlement authority, institutional custody, and cross-border payment rails, you start to see why this isn't just good news, it's foundational. And here's the kicker: every single one of these functions touches the XRPL ecosystem. And yes, indirectly, that matters for XRP, not because of hype, not because of memes, but because utility at scale creates demand for throughput, liquidity, and settlement efficiency. This is where the story starts getting uncomfortable for people who dismissed XRP years ago, because this isn't theory anymore, it's structure. And once structure is in place, markets eventually follow, even if they drag their feet at first. Now let's talk about what this actually means for XRP itself, price dynamics, and why the market hasn't reacted yet, because that part is just as important. Now let's deal with the question that's making a lot of people restless. Why didn't XRP immediately explode on this news? Because this is where retail psychology and institutional reality completely diverge. Retail traders are conditioned to expect instant candles. Green news equals green chart. But that's not how structural developments play out. Short-term price action reacts to liquidity, leverage, and macro sentiment. Long-term price repricing reacts to utility, regulation, and capital access. And those move slower, but when they don't move quietly. Right now, the broader crypto market is risk-off. Rates are still high, liquidity is tight, and speculative leverage keeps getting flushed. In that environment, even massive fundamental news can get ignored temporarily. That doesn't invalidate the news, it delays the reaction. Here's the key point most people miss. Banks don't buy headlines. They buy completed systems. They don't front-run conditional approvals. They wait for operational readiness, finalized compliance, and production-ready rails. That's why you don't see immediate institutional inflows yet. They're not late. They're methodical. But once Ripple converts this conditional approval into a full charter, the game changes. At that point, Ripple isn't working toward being a regulated financial entity. It is one. And that unlocks things retail traders don't think about: balance sheet usage, treasury integrations, collateral frameworks, and regulated settlement pipelines. That's real money territory. Now let's talk XRP specifically without hype. XRP is not a stock. It doesn't represent ownership in Ripple, but it does sit inside an ecosystem that's being built for high-velocity value movement. When RLUSD is issued, custodied, and settled through Ripple's infrastructure, it increases network activity. When cross-border payments scale, liquidity requirements scale. And when liquidity requirements scale, assets used for bridging and efficiency become more relevant, not overnight, but inevitably. This is why XRP's value proposition has always been misunderstood. It's not about retail speculation cycles. It's about being positioned inside financial plumbing before the water starts flowing at scale. That's boring until it isn't. Historically, XRP has moved violently after long periods of frustration. That's not an accident. That's what happens when positioning builds quietly while sentiment stays weak. People capitulate near lows, not highs. Institutions accumulate when patience runs out, not when excitement peaks. So when you see XRP trading sideways or pulling back slightly on news like this. Don't interpret that as rejection. Interpret it as absorption. The market is digesting information that doesn't fit a 1-hour candle narrative. And this is where discipline matters, because the people who win these cycles aren't the ones who time the exact bottom. They're the ones who understand why something matters before it's obvious and stay positioned while everyone else complains about boredom. Now let's zoom out and talk timelines, expectations, and what actually needs to happen next for this to translate into sustained upside, because this isn't about days or weeks anymore. Now let's talk timelines and expectations, because this is where people either stay grounded or completely lose the plot. The conditional approval is not the finish line, it's the gate opening. Realistically, Ripple converting this into a full national trust bank charter is a 3 to 6 month process. That means audits, capital verification, compliance systems, board approvals, and technical integrations all need to be finalized under OCC and NYDFS supervision. This isn't speculative work. This is procedural work. And Ripple is one of the few crypto-native companies that has already been operating inside regulatory frameworks for years. Once that full approval lands, Ripple will be able to operate a federally regulated trust bank without needing separate state-by-state licenses. That alone is a massive competitive advantage. It compresses timelines for partnerships, reduces legal friction, and makes Ripple a far more attractive counterparty for large institutions that cannot touch unregulated entities. This is also where the ETF narrative starts to matter more. ETF issuers care about custody, compliance, and settlement certainty. A Ripple-backed national trust bank supporting RLUSD custody and settlement makes the ecosystem cleaner, more auditable, and more institution-friendly. That doesn't guarantee ETF inflows, but it removes barriers that previously made them harder. Price-wise, expectations need to be realistic. Short-term, XRP can still chop, revisit lower levels, or stay range-bound. That's normal in a macro environment where liquidity is tight and risk appetite is weak. Anyone promising straight-line upside from here is either inexperienced or lying. Medium-term, think 6 to 18 months, this is where structural changes start to matter. Tokenized assets, stablecoin settlement, and regulated cross-border payment flows don't explode overnight, but once they reach critical mass, they compound quickly. That's where XRP's role as a liquidity and bridging asset becomes more relevant. The extreme bullish scenarios, double digits, 20 plus, even higher, are not about hype. They're about market share. How much of cross-border settlement, tokenized asset flows, and institutional liquidity does Ripple actually capture before competitors fully roll out their own systems? That's the real variable, not tweets, not YouTube thumbnails. And this is why patience is the real edge here. Most people don't lose money because they were wrong. They lose money because they got bored, frustrated, or shaken out before the thesis played out. This is one of those moments where the thesis just got significantly stronger, even if the chart hasn't reflected it yet. So let's land this properly, because this is where perspective matters more than price. What Ripple just received is not hype news, it's infrastructure news. Conditional national trust bank approval puts Ripple in a category that almost no crypto companies occupy: regulated, federally supervised, and positioned directly inside the US financial system. This isn't about tomorrow's candle. This is about where settlement, custody, and liquidity live over the next decade. The reason XRP's price hasn't exploded yet is simple. Markets don't price in what isn't operational. They price in speculation first, execution later. Right now, Ripple is still in the execution phase, completing audits, final approvals, integrations, and compliance frameworks. Once those pieces are locked in, the conversation changes from potential to deployment. That's when capital moves differently. For XRP holders, the takeaway isn't to chase excitement or panic over red days. The takeaway is understanding what problem XRP is positioned to solve: stablecoin settlement at scale, cross-border payments without friction, tokenized assets moving across rails that institutions actually trust. If Ripple succeeds in even a fraction of that vision, XRP does not stay priced like a speculative altcoin. But here's the honest part most people won't say: nothing is guaranteed. Ripple still has to execute. Competitors still exist. Macro conditions still matter. Adoption takes time. And markets can stay irrational longer than most people can stay patient. That's why positioning matters more than prediction. Know why you're holding. Know your time horizon. Know your risk tolerance. And don't confuse short-term price noise with long-term structural change. This is not financial advice. Crypto assets are volatile and risky, and you can lose money. Always do your own research. assess your personal financial situation, and make decisions that align with your own goals, not someone else's conviction. The wheels are in motion. Whether you stay on the ride is up to you.